Hey everyone, since December 30th, I've been publishing a list of my top stocks to buy in the current month. I've been updating this list every month all year long in 2024. I'll do it again here. I'll update you on the top 26 stocks to buy right now, according to my research and my opinion, and I'll highlight how they've performed so far year to date, how my stock picks throughout the year have performed compared to the broader S&P 500 ETF. So let's get into the top stocks and then I'll compare it with the S&P.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first batch of stocks, I'm going to do it in a couple of batches here, includes the Walt Disney Company, Alphabet, Nvidia, Visa, PayPal, Fortinet, Fiverr International, Netflix, Alibaba, Uber, Amazon, and Target. Now, I have the performance here of these stocks year to date, as well as the name of the stocks. Now, I encourage you all, do not just buy these stocks on this recommendation. I have more videos on each of these stocks that I'm mentioning here. I encourage you to go on my channel and dig through and do deeper analysis on each of these stocks before you consider making a purchase. In this video, I'm going to keep it short. I'm not going to dive deep as to why I'm recommending these stocks. I'm just going to provide an overview and a list of the stocks. If you want deeper analysis, I have more videos. I've been following these companies for several years. I have entire playlists dedicated to each of these stocks so you can dig deeper before you decide to buy. The next list of stocks includes Starbucks, eBay, Zoom Video Communications, Chewy, Nike, Meta Platforms, AMD, Snap, Coca-Cola, The Home Depot, Six Flags, and Salesforce. Now you can see the performance of this batch is not as good as the previous batch. I've got some big losers here, including Chewy, which is down 35% year to date, Zoom Video, which is down 14% year to date, and Snap, which is down 11.75% year to date, despite the fact that recently Snap reported above expectations in their earnings report that sent the stock price soaring over 20%. Still, it's down on the year. In the previous batch, it included Nvidia, which is up over 75% year to date. And I've constantly had questions all year long asking if Nvidia stock is too expensive after increasing so much. And I've constantly reiterated my buy recommendation for Nvidia stock because the stock price increase is justified by its increase in sales, in profits, and cash flow. It's grounded on a firm foundation. It's not growing, it's not increasing just because of the popularity of artificial intelligence. It's actually gaining sales and profits and cash flow as a result of increasing demand in AI. So I feel its stock price increase has been justified. Now, some surprising picks here include Fiverr International, which is down 24% year to date, and Alibaba, which is down 3.77% year to date. Alibaba is relatively cheap compared to other e-commerce peers worldwide, as the company has struggled to demonstrate growth in profitability and growth in revenue. Still, I feel the company is undervalued and provides investors solid upside. Now, the S&P 500 ETF has returned 6.65% so far year to date. But a better comparison to my stock picks is the Investco Equal Weight S&P 500 ETF. The difference between these two, the S&P ETF, the SPY, that looks at the total index return, and that gives a greater weight to the larger cap stocks. So it gives greater weight to companies like Apple, Microsoft, Nvidia, Alphabet, and those other large cap stocks. It gives them a greater weight. Whereas the equal weight ETF just looks at all of these companies and gives them an equal weight. It doesn't overweight any of the companies because they're a larger cap stock. So my returns, I'm going to look at it and I'm going to compare to both of them so you can see for yourself and see which one you want to compare my results to. Also, I'm adding a new stock to my list today, and that is UiPath. UiPath combines automation with artificial intelligence and is demonstrating strong top-line growth, and the company made impressive cost-cutting measures late in 2022 and early in 2023 to improve profitability. Micron Technology I have here. I added Micron to my list last month. So Micron was the new stock I added last month, and this month I added UiPath. I'm adding UiPath. This is the first time I'm letting my viewers know about UiPath making my list of top stocks to buy. So I've looked at Micron's performance just for the last month on a 1 month basis, because that's how long I've had Micron on my list, and it's down 2.91% since I recommended it roughly a month ago. So now that we have a list of the stocks, let's look at the comparison and how they've performed so far. So here's my list of stocks and their performance over here. The ones highlighted in the red are the ones that are negative, and so I've had a list of 25 stocks to buy, and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of them have been negative, and 15 of them have been positive. So 15 out of 25 in terms of positive versus negative in this list. And overall, the average return is 5.23%. So as of April 30th, my list of 25 stocks to buy has returned 5.23%, a solid return to be sure. Now, if you compare it to the S&P Equal Weight ETF, I have outperformed considerably. That ETF, remember, returned 3.01%. But if you compare with the S&P 500 ETF, which gives greater weight to large cap stocks, then my return would be underperforming by roughly 1.4%. But keep in mind, I'm allowing an equal weight for, NVIDIA, which I've delivered a return of 75% on NVIDIA. So I'm counting that as just one in an equal weight return, averaging each one equally. If I were to give a greater weight to larger cap in my returns, then NVIDIA would get a greater weight in my portfolio, and it would boost the total return of my portfolio as well. I'm not doing that. I'm just averaging out the return, counting each one as just one and not giving a greater importance to the weight of the portfolio. So I've been updating this every month all year long, and I'll continue updating the list as I go along. Again, I encourage everyone to dig deeper into each of these stocks before just taking the recommendation. I have several videos on each of these stocks, and you can feel free to ask any more questions about any of the stocks if you would like to know more information, because this was a relatively shallow dive into each one of these companies, just a review of the performance and the inclusion of UiPath into the list. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.